let's start the webinar. For this session, we have Nurul Farhana Binti Nur Saidi, strategist from Phillip Research, to share about Malaysia equity market and stock picks, as well as Daniel Diaruraman, infrastructure development and management, investor development from Bursa Malaysia, to talk about Bursa Marketplace. Let us welcome them. Take it away.
Okay, thank you, Roshan. Hi, I'm Farhana, strategist from Phillip Research. So give me a second to share my screen. Okay. Okay, so without further ado, like what Roshan has mentioned just now, so I will talk about the 2023 market outlook, which essentially our main theme for 2023 is fall to rise again. So before we start or before we begin, we have to address the disclaimer where while all sort of like reasonable care has been taken in preparation for this document, and however, but at the same time, no responsibility, no liability is accepted for errors of fact or for any opinion that is being expressed herein. That at the same time, I do want to remind that when it comes to some of the information or some of the opinions and projection and estimated that are being shared today is subject to the changes without further notice, because of how market is being sort of like very, very fluid at the moment. So with that out of the way, we shall start with our 2023 outlook. But before we look into 2023, we have to look back into what we have mentioned back in 2022. So 2022 was the year of Tiger. So essentially we took the acronym of Tiger, where we actually we have seen there's tension happening around the west between the China and also the Russia, Ukraine, and also the North and South Korea tensions. That when it comes to inflation, this is sort of like, it's not new to everyone. It's more about the unexpected monetary tightening, especially from the Fed, especially coming from second half of the year, where essentially it caused a lot of shock into the stock market. Then Goldilocks essentially talking about how U.S. market coming up and about when it comes to their economy, where essentially their consumer spending come up from post-COVID period. And then emerging essentially refers to the global financial conditions today, that is sort of like we post-COVID last time, we do mention a lot of people keep talking about K-shaped recovery, where there is going to be a duration when it comes to recovery, where those advanced economy would probably going to be seeing a faster recovery compared to the emerging market, which we've seen last year. Then rotation essentially talks about how the stock market have been sort of like investors are choosing between value and growth. However, the reason why we bring up all this in 2022 is because most of these risks, right, essentially 3 to 4 out of these risks, essentially we will gonna see it again in 2023. So first thing first to address is essentially going to be on the economic condition, where especially on the tension parts, right, the Ukraine-Russia tension, it's up for its first anniversary essentially on 24th of February. So in that regards, we do expect, not to say that we expect that there is going to be heightened tension or anything, but then at the same time, we do keep in mind that the first anniversary is up and coming. To a certain degree, a lot of people have forgotten about the Ukraine-Russia tension, and the whole situation has been quiet for significantly. But then at the same time, if we look into the Russia situation, economy itself, when it comes to their fiscal balance and also their foreign reserve, they do able to endure a prolonged tension period. And then this one also applies to the China situation when it comes to their China and also Taiwan tension, where if we look purely on their fiscal, sort of like their balance sheet and also their foreign reserve, they can endure sort of like a prolonged tension period. But then at the same time, if we look of all these sort of like tensions, right, it already been to a certain degree has already been discounted by the market, also by the market and also by the economists. So if we talk about the economy, essentially we can't run away from talking about the GDP growth. So what IMF has said is that this is based on their September economic outlook. Essentially, even back then, they already have been revising down 2023 GDP growth by they have been revising it down by at least 20 basis. So essentially across, they also revise it down across all regions and also across all countries as well. So right now they are looking at the world GDP for 2023 at 2.7%. And when it comes to advanced growth, it is slightly lower compared to the Asian market and even so to the China market essentially. But then at the same time, I do have to remind that this is based on September economic outlook. So IMF would most likely gonna be releasing their new economic outlook by this month. So we do expect them to continue to sort of like revise the GDP growth again this round as well, to actually take into account more aggressive Fed and also a few other economic conditions that have been deteriorated since September. Okay, so when we talk about, we look into the 2023s, right, we know that all even IMF also sort of like has been revising down their economy target for next year. So one of the main thing that we look at essentially on the trade monitor. So essentially after post-COVID, once the whole economy sort of like open up, there's a huge pent-up demand coming on from there, then now it start to slow down, and this essentially we can see the same trend across to the even to the world trade and also on the world freight numbers. But so that actually last time during when the freight that because of a post pandemic demand pickups, the freight what you call it, the freight cost sort of like has jumped significantly. So that actually has derived the inflation number to go up as well. So that one, since the freight cost has been down significantly, so we do start to see even the CPI, even the inflation data has started to come to peak. So we sort of like now even the dry Baltic index, the dry index numbers as well shows that it has come to a stabilizing level. Okay. Then another part of the economy or sort of like economic growth, right? People will always talk about technology, but then if we refer to the technology back then compared to now, back then we always refer to the iconic or sort of like the behemoth of technology, essentially led to either FANG or GAFA. But then the thing is, when it comes to technology today, the trend is slightly different when it comes to the newer generation, when the way that they consume their news, the way that they consume their information, the way that they actually buying things right now. So it's not just necessarily directly through the normal what you call it, conventional platform like Shopee or even Lazada. But then nowadays, most of what you call it, consumer essentially, while they are consuming all these TikTok videos as well, they do buying directly through TikTok as well. Then when it comes to the news flash, last time, sort of like before Elon Musk essentially take over Twitter has always been the go-to place for the new generation to get the news. And then Instagram also essentially is more of like sharing idea concept, all this. So that disrupt the whole what you call it, the physical magazine part. And then when it comes to YouTube, they compare information and even some of the other SNS. And then nowadays people start to not to put it this way. If you want to search on something, you don't really Google it anymore. Sometimes people just go straight into all this social media. So what that means is that when it comes to even on the semiconductor side, on technology side, right, even though the world semiconductor do expect for the total world growth for semicon essentially to come down to 4.1% for 2023, but then if we drill down further into the numbers, essentially the thing that actually caused the big drag on the growth for 2023 is essentially coming from memory, which is derived back, like majorly of that portion is actually derived from the smartphone industry. However, if you look on all the other industry is actually not that, it's actually not that bad. Okay. So moving on from there, essentially, if we look into even on the what you call it, oil price, right? When we talk about inflation, we can't really run away from talking about oil price. So OPEC output and also the WTI prices. Last time it seems to be to have some de-link on the price movement, but then however recently we start to see that it start to move in the same directions again. Then at the same time, if you look into the sort of like on the US consumer side, right, their gasoline price also start to came off nicely. And then at the same time, they ask the US consumers essentially are still spending with their labor participation still goes on a robust at a healthy level. So essentially, this is one of the things that Fed has been continue to raise their concern on, essentially because of how strong the labor market has been, and essentially the part of that where they are very, very concerned at the moment is the wage inflation will continue to put on pressures on the rest of sort of like to continue to put pressure on inflation. So that is one of the things that continue to make Fed to continue to be hawkish at the moment. But then if you look into the inflation at the moment, right there, here we have the flexible inflation and also the sticky inflation, which is essentially the sticky is more of a core sort of like non-energy related or non-commodity related components, where initially there is even previously, I think we have mentioned earlier that when it comes to these two relationships, there is about 6 to 9 month lagging impact or lagging trend between the two. So now, since the flexible inflation has started to see it coming off sort of like since middle of last year, then we even like during the last session, we essentially says that the sticky CPI, we would start to see it speaking in December, and we still hold that situation, we still hold that opinion true. So we are waiting for the CPI numbers to come out this Thursday, essentially. So what if we look back into that track, right? So that actually sort of like resulting into the way that we monitor how the Fed is looking into the way that we look into the Fed monetary path is still on track. So essentially, we because of the inflation is still peaking, we deem that it's going to peak on December. Then at the same time, we do expect that the labor market is going to be ease off or sort of like start to cool off 2023 due to the normalization that that is happening, sort of like occurring post-COVID situation, where even I think like for the past few months, you have heard like quite a number of companies, especially the technology company, has started to lay off a lot of their workers, and most of the the strong labor market data that was seen for the past few months essentially coming in due to the way that we view it is that it is coming in from the temporary workers position that is open due to the holiday season. So moving forward, we would see most of the impact or sort of like the normalization of the employment would start to take place. So that actually sort of like in line with what the Fed is looking at as well, where they actually look at the interest rate for the Fed fund rate for this year would still remain to be high. The median rate is currently at 5.1%, and then moving into next year, where the the Fed fund rate would start to taper off. So we don't see that Fed would do its Fed pivot for this year, and it's most likely it's going to be if anything, it's most probably going to be on next year. So at least for this February FOMC meeting, the market consensus is actually still looking at 25 bips, sort of like more than half essentially look at another 25 bips rate high, and the rest is actually looking at another 50 bips rate hike. Although Fed do mention that they would look at and also review the situation on at every meetings essentially. Yeah. So now, just now I mentioned about recession that we about recession situation for this year's, right? So right now the whole situation is that the talk about recession has been on sort of like is widely talked about for 2023, but then the thing that we are quite concerned about is that whether the recession, the slow growth coupled with the slow growth, the cooling off of the labor market, is it going to couple with together with the stagflation? Then if we look into the Fed economic outlook data, essentially even for them, they also look into a slower growth rate for US economy for next year, and even a higher unemployment rate for next year as well. So moving on into that, essentially, if you look into the sort of like the retail sales, the industrial production, even their export and imports data, everything start to taper off as well. Then even on the export side as well, all this start to show it has to start to what you call it, to point down as well. Then at the same time, if we look into the whole situation of oil, right, then does that, because since US has started to show a sign of slowing down, then the question whether the recession is happening, the recession or stagflation is happening. So essentially stagflation is where the situation of slow growth coupled with a high inflation rate, right? So if you look into the whole situation in a more holistic view, essentially this boils down to a global slowdown situation as well. So if you look into the crude oil price, the OPEC basket and also WTI, it does trend into a similar manner. And then this shows that when it comes to inflation that caused by oil lifetime, essentially it is coming off from a war premium. So as I mentioned earlier, when it comes to the tension between the Ukraine and Russia, it does come into a 1-year anniversary this by end of this month, essentially. So if there is any development coming in from that part of the world, so we know that the war premium will start to kick in again, then inflation would most likely is gonna remain to be high at that point of time. So that's why if you look into even on the fertilizer and also natural gas position, it still remain high to date. But then, however, since we have been into this situation for more than a year already, so to a certain degree, we could consider that the fertilizer price or even the food inflation price has come to a new norm era. So now back to Malaysia economy. Essentially, when we look into our industrial production, it's still quite robust. I won't say robust, it's still quite healthy to a certain degree. Then when it comes to our Malaysian import, also Malaysian import as well is still growing to a certain degree. However, it does start to point downwards as well. Then when it comes to our tourist arrival, I think everyone is sort of like aware that when it comes, we are anticipating for since China start to open up start to ease off their zero COVID strategy. So essentially, we most likely going to see a rebound on the tourist arrival, especially coming from China, because compared to other region, the bulk of our tourists even back then is coming. Bulk of it is actually coming from China. However, at the same time, there is a lot of concern. There is some concern in relating to China tourist arrivals. So as of now, there's no from Malaysia's side. For Malaysian side itself, we don't really restrict them from coming in. However, if they do show some symptom during the flight or even upon arrival, they do subject to a further screening. In comparison to other countries like Taiwan or even Japan or even South Korea, essentially do requires them to show a negative result like 48 hours or even up to 72 hours prior to the arrival to the country. Then if you look into Malaysia consumer sentiments, right? So this one is still holding up well and still picking up essentially even towards the third quarter of 2022. Then here, if you look into like the retail sales, or even on the other parts of sort of like the retail trade index, right? The Malaysia consumer spending are still quite still robust, I would say. So at the same time, if we continue to look into the consumer spendings, right, the one thing that always sort of like pop up into everyone's minds is essentially on the household debt. Although it still remain high, but then at the same time, if we look into the whole situation, our household debt to GDP has always been high, and also when it comes to the liquid financial asset to debt equity level, also that part has actually started to taper off as well. So all in all, although our household debt has continued to be high, but then it's still manageable at the same time. Okay, but then when, if we look into the business confidence indicators, right? So that part is still continue to show that it's growing robustly it's still growing it's still pointing upwards. However, when it comes to the OECD CLI index, that part is actually shows on the opposite directions. So all in all, when it comes to the macro perspective for Malaysia business per se, when it comes to the operating margin, although it has been coming off to 7.3% from 7.4% previously. However, it still stays above 7%. However, the thing that we do want to keep an eye on is essentially on the business interest coverage and also the impaired loan ratio of business sectors, because essentially with the Fed continue to raise their interest rate, so BNM Bank Negara also essentially would probably have to do some catching up game as well. So in regards to that, when it comes to Malaysia government itself, so it's all about the managing the limit, where our government debt to percentage of GDP is still quite still healthy, with our statutory limit is still above our government debt level. And then when it comes to our fiscal balance, also to a certain degree is still manageable. And then at the same time, under the new Anwar Ibrahim government, essentially the new unity government, last time the budget 2023 that was announced last year essentially has to be retabled again. So that is up for retabling on 24th of February this year. So at the same time, for now, since this unity government is sort of like a new thing, a new situation for everyone in Malaysia, so there's still a lot of uncertainty when it comes to policy for Malaysia. Okay, so in relation to that, another part that everyone will talk about when it comes to Malaysia is essentially our weakening Malaysia ringgit against US dollars. So we do when we run into a linear aggression analysis, so essentially our view is that for Malaysia ringgit to touch 5 ringgit to 1 US dollar, to touch to that level, essentially the US yield has to rise to 5.45%, while the BNM rate at the moment it would still remain unchanged. So that's why earlier we mentioned that when it comes to Bank Negara, they do have a lot of catching up game to do when it comes to the interest rate spread. So another question is that when it comes to stagflation, just now I posed a question to US, right? So does that trickle down to Malaysia? So at this moment, we don't see that situation happening, because essentially if we look into the disaster index, it's still quite healthy compared to sort of like still below the 10% threshold, which even back then during the COVID period also, if you look into the disaster index, our disaster index didn't reach 10% as well. So for Malaysia, at least for economic outlook for for 2023, we still look at the GDP growth of 4%. Then consumer inflation is actually we look at 3.3%, and fiscal balance still manageable at 5.5%. Whereas the OPR rate is probably going to be increased up to it's probably there's going to be another one rate hike for this year. Then the exchange rate, essentially this is just our base guesstimate to for year end of 2023. We look at 420. Okay. So lastly, back to the equity markets, right? If we look into the equity market at the moment, because since there's a lot of since there is some margin shrinking happening, so essentially right now there is it becomes less speculative. Then there is a shrinking of margin trend that is ongoing as well. But then at the same time, although all this shrinking of liquidity is happening, there is still liquidity in the market. However, because of the and then at the same time, if you look into the stress index, right, most of the countries, especially on the advanced economy, they still do the index over the economy over there is still not stressful compared to the emerging market, essentially. Then if we look into like Malaysia market versus the S&P 500, we can't run away to say that we are still quietly influenced by the US market when it comes to Malaysia market. And this one, okay, I mentioned this one before. Then when it comes to the volatility on the US market, since I mentioned that the US market still have influence on the Malaysia market, the volatility has been coming off recently as well on the US market. But then at the same time, if you look into the EPS, sort of like earnings growth for both S&P 500 and even NASDAQ, essentially it's still growing. It still show growth, but then at the same time, the PE sort of the PE valuation sort of like still remain similar. So it does come to a question whether there is going to be a revaluation happening. So that would trickle down to our Malaysia market as well, because essentially at the end of the day, most of our sort of like foreigner has been net seller to Malaysia market for quite some times. And then for now, for us to sort of like to have a positive sort of like a strong rebound on the market, essentially we do need the foreign fund flows to start to come in, sort of like even like last year towards the second half, towards the first half of the year, essentially we start to see a lot of foreign flow coming in. So that is where even our KLCI also show a very a strong rebound in the market. But then towards the end of the quarter, especially towards the last quarter of the year, a lot of foreigners has sort of like left our market as well. So all in all, if we look into all these situations, right, the base case scenario that we're looking at for KLCI for next year essentially is we have pegged it at 14.8 times PE at 16.95 levels. However, at the same time, we do put it the same percentage for worst case scenario as the base case scenario, mainly because of if Fed continue to be hawkish at this at current level, essentially. So the worst case scenario is looking at 14.08 level. So these are sort of like some of the indicators that we are looking at, and some the level of intensity. So to a certain degree, a lot of the risk that has been sort of like most of the unknown risk has been a known risk, and it actually just a spill over from last year to this year. So for 2023 is a year of rabbit. So similar to last year where we have acronym for tiger. So for this year, the acronym is going to be on rabbit itself. So essentially, first it's going to be a rotation where it's a fund rotates amongst the countries from advanced country to even to the emerging market. And then for E, essentially it stands for UNWA, which refers to the Malaysia new unity government policy. We still stand quite a number of risks there, which we would know our answer by the end of February. Then the next one is going to be burst, which essentially this is a black swan event for a solar flare, which may cause the financial market to shut down if that occurs by this year. Then blockchain refers to the crypto and also NFT crisis. If that sort of like recur again from what we have experienced from Luna last year, then inflation risk is more of an unexpected monetary tightening that caused a shock to the stock market. Then tension, essentially it's the same thing that I mentioned earlier when it comes to China-Taiwan tension, then the Russia-Ukraine tension, and also North and South Korea tension. Okay, so when it comes to the scenario, we still have this 4 scenario of disinflation, a strong economy, prolonged inflation, strong economy, disinflation and recession, and also stagflation. However, our base case scenario essentially is going to be on the first scenario of disinflation and strong economy. But then, as I mentioned, because there is a risk of Fed would remain hawkish for the whole year of this year. So essentially that would lead into the scenario 3 and 4 combined together. So yeah, lastly, it's going to be on stock space. So for stock space, essentially we have a technical stock pick which give more than 20% upside from last week closing price. Essentially, the first one is Formosa Prosonic Industry, where the target price is 392 and closing price is 323. I'll just go through very quickly on each company essentially. So the next one is going to be on FM Global Logistic Holding, where the third price is 82 cents and closing price of last week is 56 cents. Then Rexit Berhad, where target price is 94, closing price of last week is 78 cents. Then Kumpulan H&L High Tech, target price is 119 and closing price of last week is 94 cents. Then lastly is on Greatech Technology, where our target price is 569 and closing price of last week is we're looking at 478. Then lastly, since I mentioned a lot about economies, right? About the economies, right? So if purely based on go directly into essentially we can have a sort of like exposure to the diversified exposure to the market through an ETF. So for Phillip Research, we do participate into the Bursa ETF research scheme. So we do have a few ETF that we wrote for Bursa, which the second speaker Daniel would talk more later on. But then just to sort of like brief, to introduce some of the ETF that we still have a buy call at the moment, is that on Trade Plus Bank Inverse Tracker, which we still have a strong buy rating at the moment with a target price of 2448. And then Asian also, we still have a buy call. So essentially it's going to be on Principal FTSE ASEAN 40, which we have a buy call with a target price of 180. Then my ETF, my ETF MSCI Southeast Asia Islamic Dividend, also we do have a buy rating on this one as well with a target price of 92 cents. Then lastly, it's going to be on Trade Plus DWA Malaysia Momentum Tracker, where we do see positive momentum for at least for this quarter of the year. For this ETF, essentially the target price is going to be on quarterly basis, because of the rebalancing of the index is done on quarterly basis. So for now, for this quarter, essentially we have a buy rating with a target price of 97 cents. So that is the last one. So since we have Daniel on our panel today, so I'll pass the floor to Daniel to talk more about the Bursa Marketplace, because the research, the ETF report that I've shown here is essentially can be found on the Bursa Marketplace website as well. So yeah, Daniel, the floor is to you. I'll stop my sharing.
Thank you very much. Oh, yeah, I'm assuming you guys can hear me, but if you can't hear me, do let me know. And again, my name is Daniel, and I will be talking about Bursa Marketplace. And while I get my slides in order, why don't you guys put in chat over there if you've used Bursa Marketplace before? Just type, yes, I've used it in chat right now. So go ahead. All right, so it looks like we're not having that many people using Bursa Marketplace. Maybe one there. I can see one, maybe. Yes, two. That's good. So we have several people that is used to Bursa Marketplace, but I'm going to elaborate you further because that's the purpose of today's talk here today. So what is Bursa Marketplace? Bursa Marketplace is essentially you can do it. I believe in you. There you go. A one-stop portal for you guys to learn, try, and apply. Now, I'm assuming the people who are in the chat right now are a little bit more experienced in investing. But even if you're new, this is a good place for you guys to start, because even if you have zero knowledge about investing, Bursa Marketplace have the tools to bring you from zero. I want to say zero to hero, but it's a little bit cliche, but something like that, a little bit more experience by the time you get to the end. So very first, we have the main thing over here. When you arrive in Bursa Marketplace, you're going to have to learn. Because like everything, you want to get a degree, you want to get a driving license, the first thing, you read, you research, you do your reading and all that, you learn. So the first thing on Bursa Marketplace, we have a subsection under there called Bursa Academy. Bursa Academy is essentially where we host all of our learning materials. We have articles, we have videos, we have newsletters. All of these are all available to you for free. You don't even have to register. So go ahead. You got some URLs at the side over here. I'm not sure if you guys can see my what do you call my mouse here. Arrow options. No, can't get it visible. Yeah. So over here, you can see my mouse over there. That's the URL. So go ahead, give it a look, because on that side as well, we got some news where we will update you on the regular goings on the market, because that is something you need to get on top of if you are planning to invest. And finally, we have events. This is kind of like events like this, where we have talks and workshops that is available for you to attend for free. Yeah, maybe some they need you to pay like 10 ringgit, but that's mostly so that people don't come book and then never come in. So go ahead and give all this a try. The events, you may need to register an account before you guys can participate. So once you have all this learning information and everything, you guys are ready to invest. Well, most people say that. For me, I want to kind of like test it out a little bit. So we have the try section on Bursa Marketplace. The try section's purpose is to equip you with the tools that you can use to inform your trading journey when you start trading on Bursa Marketplace. So first, we have the Alpha Indicator. Alpha Indicator is a tool that's developed by Refinitiv, but the idea is, imagine if you have a kind of like a researcher that goes through a company's fundamentals and then rates it from 1 to 10. So in this case over here, we got Apex Healthcare, but the main thing I want you to focus on is down here, the Alpha Indicator section, where it has 5 values over here: earnings, fundamentals, valuation, risk, and momentum. It rates it from 1 to 10, and then it gives an average rating of the entire company over there. So 10 is good, 1 is bad. So you can use this to kind of like get an idea on how the company is doing fundamentally, because that's what they are looking through here. If you are looking for what you call for something more short term, I suggest you look at the Analyst Consensus. Analyst Consensus is basically like what I found out just now. They have their team look into a company and then they give what their suggestion is. In that case, just now buy or sell, and here's our target price. Now over here in Bursa Marketplace, this place we congregate multiple researchers with all their suggestions on a particular stock, and then we will kind of show you the general idea of what's their target price, what's their target date they will reach there, what's their recommendation. That way you can see all this and again make your own judgment, because all of this is all just tools for you guys to get to know about the company and then make your own trading decisions. And then of course all this information is available on the stock ticket page that will outline all the basic information that you guys will need when you look into the company. So you can see all the information here for you guys. And again, just to remind you, all the URLs are like on the side, so you can use this to get to know all this information. Next, there are like 900, 1,000 companies in Bursa Marketplace, and it's a little bit difficult for you to pick which one stock you want to look into. And that's why we have the screener. This is for people who already have a general idea of what you want to invest in. For example, I'm a computer science student, so I'm good with techie stuff. So I want to invest in a tech company. But then I'm not very rich. So let's invest in a company that's like under 10 cents. By putting those two together, you will be able to list down from this 1,000 plus company, maybe to maybe 7 or 6. Then you can use that to look into the company further and then make a decision whether or not you want to buy or sell. Now, but let's say if you have no idea, you don't even know what kind of company you want to look into. That's fine, all good, because we have the heat map that you guys can use. The idea of the heat map is that it shows the activity on the Bursa Malaysia right now. So you can see down here a bunch of green and red boxes. The boxes basically shows you movements. In that case, we can also choose what kind of thing that we want the box to display, either percentage movement or market cap growth or the profit or loss of a company. So that way you can use this to see which company is making the biggest movement, and then maybe you can use that to look into the company further. So even if you have no idea what to look for, we have the tool for you. And again, all of this is available for you to access on Bursa Marketplace for free. Next, we got the research. This one is for the more pros of you, and the one that Farhad told just now. All of the research that Phillip's produced will be posted on Bursa Marketplace as well, where you guys can search for it and then download it for free. You only have to register for a free account. Now, from over here, you can of course filter to whatever companies you interested in, whatever research houses you are interested in, or what kind of calls are there. So all of it are over there. Use it to perform your own research now if you are interested. Now, you have all this information already. You have all these tools. Some people are ready to immediately get investing. Not me. I'm not a brave kind of guy. I want to test drive the car first before I buy the car, if you know what I mean. So we got this section over here called the apply section. Now, this is where you guys have all this information that you have. You can apply it in a trading environment, but not in a risky kind of environment. Yeah. So first of all, over here is the profile page. Now, this one's not much functionality. The main purpose of this is to show off. You can share this page to your friends to show off where your progress on in your portfolio, in your My Games, and so on. Just share it. No problem with that. Now, this page, the My Quest, is essentially a habit builder, because the hardest thing to do when you start a new thing is the first step, buying the first stock, actually going out to the gym. Like, the first step is always the hardest. So the purpose of this page is to just give you goals and objectives for you guys to go ahead and work towards. And also to the bottom of there, we also have the trading journey, which it gives you a step-by-step guide if you want to learn more about investing. So it starts from what is investing all the way to learning like about futures and like all the more complicated financial instruments and financial strategies. Now, finally, this one might be the thing that most interests you is the My Portfolio. The idea of the My Portfolio is that you can trade in a risk-free environment. In this one, you can create your own portfolio, give yourself how much money you want, and then trade whatever stock that is available on Bursa Malaysia. So this one, for example, if I want to pretend like I'm Jeff Bezos, give myself $1 trillion, 1 trillion ringgit, and just start trading like a boss. Or you can be like a little bit more chill. You can, give more realistic, maybe give yourself 2,000 ringgit and then, be more, so that you can use this as a guide for your future when you actually start trading. Now, we also have futures over there if you are interested in trying that out. Of course, those are a bit more risky, a little bit more complicated. So go ahead and give it a try. Again, safe environment. Feel free to try. All you need to do is to just register an account. Now, the next is the leaderboards. The idea of this page is just to show who's the most active on Bursa Marketplace. So if you are the more competitive trader, go ahead and use this feature and see where you are in the ranking. If you can see, mine there is a 65,042. A little bit low, but I'm sure we can work on that in the future. Finally, we got the My Games feature. The My Games feature is essentially where you guys can trade with your friends. What does that mean? So for example, the admin can create a game and then set it to say, we are only going to trade stocks that are Sharia compliant, and everybody only get 1,000 ringgit. That way, everybody trades with the same parameter, and then you guys can see how much one person can go far, share trading ideas, compete, and competition always brings out the best in people, and maybe that way you guys can figure out the best trading strategy between yourselves and use that when you actually start trading. So and yeah, this is the interface itself for when you actually open a game and join in my games. And finally, once you have started trading and everything, and you start to gain a little bit more experience in trading itself, we have the Mirror, Learn, and Trade program. Now, you guys always go all on and on about like, oh, give me stock picks. I want to know what stocks to buy, blah, 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 blah. Like, it's really difficult for us to just give you because, it's not something that we have the authority to give for Bursa Malaysia. But these guys over here, now these guys are actually licensed financial analysts. So you can see these guys up here on all those pictures here. Those are all people that actually works in current investment banks right now. There's Malaga Securities. There's I recall there's one from Philips here as well. So you can see these people are experienced and they actively trade on Bursa on the Mirror, Learn, and Trade program. And not only that, whenever they trade, you guys can mirror their trade, and when they sell, you sell, and then you can see what's the timing and everything so that you can implement it in your actual trading. And the best part is, whenever they trade, they will post why they perform that trade. Why do they buy? Why do they sell? And even better, you can ask them, why did you buy? Why did you sell? And that way you can learn the strategies from these people, why they've made such decision, and then take that strategy for yourself and generate some profit for yourself in your daily trading, because these guys are crazy. I'm telling you, you have to go there, bursamarketplace.com/MLT, and give it a look, because these guys' performance are amazing. They've given 100,000 in the beginning, and right now they've gotten so high. But yeah, that is everything for me. All of these features are also available on the Bursa Marketplace mobile app. You can download it on Google Play and App Store. So feel free to go ahead, and I'll leave this for you guys if you want to scan it. And that is everything from me. Thank you very much.
All right, thank you Farhana and Daniel for the insightful presentation. Now we've come to the Q&A section. Farhana and Daniel, take it away.
Okay, so okay, the first question is essentially talk about a lot of sharing on global and Malaysia economic outlook, but no association correlationship on impact to Malaysia economic stocks, or even specifically on the stocks, right? Because the reason why we mention more why my presentation sort of like talk more about global and also Malaysia economic outlook rather than purely focus on Malaysia economic outlook is the reason because at the end of the day, if we look into like even towards last year, most of what happens in the globals, what's happening on the globals essentially does have impact into the Malaysia economy, itself. So even if we want to give more outlook on Malaysia itself, but the thing is, I think that's another question here asks about Anwar government and also the unity governments, right? So as I mentioned just now, it's something very new to a lot of people as well. So this is the first time that we do have this kind of unity government. So a lot of policies is actually still remain unknown. And the thing is, we only know what's sort of like the directions of Anwar, and also is unity government is going to be on 24th of February, when the budget 2023 is already being presented. Although we do have the first what you call it, sort of like an initial supplemental budget that has already been passed, which is quite generous to a certain degree, because it does follows to sort of like 40 if I'm not mistaken, around 45% of it still follows to what has been budgeted for, that was tabled back on 7th of October last year. But the thing is, when it comes to this new budget and also the new policy, we have no way of knowing at the current moment. So that one is sort of like, to a certain degree, it's still wait and see situation. And then when it comes to the whole global market situation, if Malaysia just now I also shares about how US market and the Malaysia market do have some correlation. So at the end of the day, if the US market came down, Malaysia market also would be impacted similarly. Then I hope that answered that part. Then the next one is Do I think glove stocks hit the bottom already? Okay. So when it comes to glove stocks, right, essentially last time it does have a good rally thanks to COVID, and then now there is this sort of like some concern that there's going to be a new variant of COVID happening, but then at the same time, because everyone sort of like have lived through this COVID situation, so I don't think that it's going to be as bad as previously. So in regards to that, I'm not sure. I don't think that it's gonna glove stock would even if it has hit bottom, I don't think that it's gonna be rebounded as strong as previously, because at the end of the day, as far as I understand, the gloves company itself, they do have this massive oversupply situation that they do have to address to, and that part of the business essentially continue that part of the equation continue to put pressure on their margin compressions. And then just now I mentioned about the stress index on the economies, right? So essentially that part you can refer to the OFR stress. The OFR website on the financial stress index is actually free to all. It actually take into account of, I think, roughly about 33 economic indicator, which includes sort of like things like yield, market variation, and also some other variable measures like interest rate as well inside it. So what it does is that on my graph just now, I make it as reverse, because essentially the higher the number of the index, it shows that the country itself is under a stress situation. So as if I were to recall on the chart itself, most of the country essentially below the threshold of 10%. Okay. So the next question is, wait, do Daniel want to take on some of the questions? Because I think there's a lot of questions for you as well.
I think we can just go from the top and then we'll see how.
Okay.
Yeah, it's okay. Just go on.
Okay, that was my view on US dollar to Malaysia ringgit for the rest of this year. So essentially, we currently we still see that Malaysia ringgit will probably stay going to remain weak. But then towards the end of the year, since we do expect BNM to actually do a catching up game towards Fed, so they most likely gonna have at least another one interest rate hike for this year. So that actually would result in our Malaysia ringgit to strengthen a bit against US dollar. That's why our year-end target for US dollar to Malaysia ringgit this year, we initially we put in as 420. Then for CPO direction for this year, we have a range of target. For CPO, essentially we look at, it's going to be range bound between 4,300 to 4,900. This is purely based on technical. So the average for this year is going to be 4,600. Then the Anwar question I already answered. Then US dollar expected to weaken against Malaysia ringgit, which I just mentioned earlier. Then when it comes to the commodity stocks, so this part actually is more relevant to the commodity price as well. So when it comes to commodity price, it's not just the US dollar factor inside it, because essentially there's also all these other tensions and also sort of like OPEC influence into the commodity prices as well. So whether it's going to be re-rated higher or not, at the end of the day, that one is still up for the market to decide. So the next question is, yeah, I think this one is for Daniel.
Right, so you're asking whether or not there's not many research from IBs are posted. Those who posted was late. Yes, there are some delays that on the information that are posted, because of course they want to encourage people to go to their own website. But the information that we have are still valid and also available for you for free. So you can go ahead and give that a look. How updated is the information on Bursa Marketplace? Now, the information on Bursa Marketplace is updated every 15 minutes. So there's a 15 minutes delay to the price update. However, for Mirror, Learn, and Trade, that price is actually live, close to reality, so live pricing. So you can use that as a guide for you to kind of like use investing for real life. But the main purpose, because of the delay, is because it's trading, and we want to maintain availability to everybody, so we don't crash the actual website. For Bursa Marketplace mobile app, is there a live price? No, unfortunately. Live price is only available on the Mirror, Learn and Trade portion of the marketplace. Is MLT using real money to trade? No, it is not. MLT will give you 100 ringgit of 100,000 ringgit of virtual trading currency. Then you can use that to perform virtual trading there. But of course, nobody's stopping you to use that as a guide for you to trade in real life. What else here? Stock picks. I think Farhana already said that at the very end of her presentation. Where else? I think the rest will be your questions, Farhana.
Okay, so any info on picks with good dividend play? So for this year also, essentially we do have sort of like recommend everyone to adopt this barbell strategy where we took the both extreme of the strategy where at one end is going to be a pure growth play, then the other end is going to be on dividend play, and then at the same time on the middle risk essentially is going to be completely neglected. So when it comes to the good dividend play, at the end of the day, most of the mature or stable companies are still in play there, where sort of like refers to the financial companies or even telco plays as well. Then any stock watch with annual government? Not at the moment, because at the end of the day, like I mentioned earlier, that when it comes to annual government, is a unity government, so it's still quite early to actually mention of who's scam or who's gonna benefit on what, because essentially it's a unity government. Yeah, so this one is still sort of like wait to see situations. Then the next question is, can I confirm is 2023 is a good year for tech stocks? Okay, when it comes to tech stock, is just now I mentioned that when even on the World Semicon Trade Index, right, they do look at the growth for this year is going to come off at 4.1%, but then bulk of it is going to be on the memory side. So essentially, when it comes to tech stocks, those companies that is heavily reliant upon the smartphone industry, which is the smartphone industry, I think since last year we already mentioned that it's already been saturated and also sort of like matured and start to come off. So those tech companies that is heavily reliant upon the smartphone probably is not going to do well this year. However, for those companies that is having exposure to, especially on the industrial or even on the auto segments, companies like even Pentamaster or even Unisem, those companies essentially would actually would continue to see a growth for this year. So the next question is, which sector will benefit under new government? Everyone is interested on annual government. So this one, unfortunately, I can't say much at the moment because we're still waiting for the policies or policies for the budget 2023 to be tabled on 24th of February. Okay. Then MUI Advanced Synergy can elaborate, which likely have some political link interest. If I'm not mistaken, even these two counters, right? Even last time during the GE15, these two companies has already been mentioned that they do have some political link interest, which is quite widely known among Malaysians. So I won't say that which one likely to have, since both actually do have political link interest to a certain degree, which you can actually just Google and search for that. Can you comment on the future prospect of tin mining giant Malaysia's Smelting Corp and also therefore, unfortunately, I don't have view on that at the moment. Yeah. So what is your outlook for the palm oil sector and palm oil stocks? Okay, so when it comes to palm oil, just now I mentioned that when the technical outlook that we have is that palm oil, the CBO price is actually going to trade between 4,300 and also 4,900. So the average is going to be around 4,900. So that should bode well to the palm oil companies essentially. I asked about Sing dollar. Oh, Sing dollar against ringgit, not US dollar against ringgit. Okay. On this one, unfortunately, I don't have a view, but I can get back to you on my technical view for the Sing dollar against ringgit after the session ended. Okay. So I'm a Malaysia PR staying in Singapore. How to buy IPO in Bursa? I only have DMB. This one, Daniel, can you take these questions, or I'm also not sure.
The easiest way that we usually suggest people who are interested in IPO and everything, we suggest to download the Bursa Anywhere app, because very quickly you can register for IPO over there as well. So I suggest you go over there, and most importantly, of course, contact your broker. They will usually be able to provide you with the options on how for you to get in touch if you want to get e-rights or you want to get IPO, more complicated trading mechanisms. So broker is a good mediator to all these processes.
Okay. Then the next question is outlook on finance, electronics, REITs, consumer sectors. Okay, so for finance sector at the moment, I don't think we have any stock pick within that sector. Then when it comes to electronics, we do have a technical buy on Pentamaster and also on what's the other one? JF Technology essentially. Then REITs, unfortunately, we don't have any technical buy on any of the companies at the moment. Then when it comes to the consumer sector, we do have a buy call on, I forgot which one, Pekka Group, which is the one that doing the seat leather for cars essentially. So we do have those companies with a technical buy at the moment. Then the next one is gonna be, what's your view on ENO? Unfortunately, we don't have any view on ENO at the moment. Magnum also, we don't have any view on those on that company. Then this one, can BMP get all IB to post all their research? This one, Daniel, yeah.
Yeah, that one we are constantly always trying to contact IBs and other researchers to include their research information. So yeah, we will continuously try to update, try to get as many organizations to get in there, because there are a lot of organizations that are interested in posting their research on there. So stay tuned.
Then next one is gaming stock to recommend for China reopening beneficiary. Initially, I do look into Genting Malaysia. However, when I look into the charts, it doesn't show as a good buying momentum at the moment. So when it comes to China reopening beneficiary, even if I look into most of the companies, I don't think those who has a direct beneficiary from the China reopening would sort of like I don't see any good technical buying momentum at the moment. And then at the same time, when it comes to China reopening stories, I do hold sort of like a lot of reservation on that, because at the end of the day, even though the China reopening story is coming out, but then at the same time, we don't see, we have to wait and see until the Chinese New Year is over, because that is where influx of migration happening. Migration happening in China. And then when it comes to China at the moment, there's sort of like a block of information happening where we can't really get a lot information directly into the China market. So we do hold sort of like a lot a reservation when it comes to China reopening stories at the moment, because we still want to wait and see until at least until the Chinese New Year celebration on how the whole migration is going to be, and also how the whole COVID situation is going to be handled by the China government. Because as of now, the China government has been sorry, not China government, essentially Xi Jinping himself has been quite quiet when it comes to the whole dynamic COVID strategy. Okay. Next question is, can you share view on Malaysia REITs, namely Capital Land Mall? Okay, unfortunately, I don't have any view on this company at the moment. Then next one is KLCI year-end target. We look at, if I'm not mistaken, it's 1695 for year-end. It's quite high. Hospitality related stock for the year. Give me a second. Not sure if I have any. Yeah, at the moment I don't have any hospitality stocks pick at the moment. Can you share your view on Malaysia retail scene? What is the retail sales rate growing and strong growth and weak? Okay, specifically on the retail sales rate growing, the sales rate itself, I don't have the number with me at the moment. However, if you look into the retail, sort of like the retail index as I shown earlier, it does shows that when it comes to Malaysia, sort of like the domestic spending, that one is still still picking up quite well. And then now we are moving towards the Chinese New Year celebration. So we do expect the spending to spending and also spending power to still be present, at least until the Raya celebration in April. Okay. Anwar Farhash name 7-Eleven chairman, what is your view? Can you buy the stock? Unfortunately, I don't have any view on this at the moment. These three banks, which one to buy first? Bank Public and RHB. Okay, when it comes to banks, essentially when I look into the technical charts, right, the one that gives me at least some certainty level is going to be on based on ranking, is going to be Maybank. Second is actually RHB, then followed by Public Bank. Okay. So there's no more questions. So Roshan, I think the floor back is, we pass the floor back to you.
Yeah, great. Thank you so much. Thanks again for Hannah and Danielle for the presentation and interactive Q&A. We have now come to the end of the webinar today, and we would like to thank you all for joining.